If you've watched the stock market this week, you know it's been a wild ride. Big drops, big rallies, and more swings than a playground. The S&P 500 is down about 0.5%, but most stocks are actually up. Just a few giant tech names are dragging the average lower. The Dow slipped, the Nasdaq took a bigger hit, and tech is clearly where the market's nerves are showing. What's behind the chaos? It's all about US-China trade tensions. Every new headline, deal rumors, tariffs, bans, sends stocks lurching up or down. This isn't just Wall Street drama, it hits your retirement savings and business confidence everywhere. When markets are this jumpy, companies freeze hiring and investments, and regular people get nervous about spending. The market is a forward-looking machine, and right now, it's staring into a fog of uncertainty. That's why we're seeing these stomach-churning swings. Fear is winning the battle against optimism. Investors are desperate for clarity. Until then, buckle up. The market's anxiety centers on the escalating US-China trade war. This week, China banned business with 5 subsidiaries of a South Korean shipbuilder, a direct response to US industrial policy. New port fees between the US and China just kicked in, making global shipping more expensive. These costs ripple through the economy, raising prices for businesses and consumers alike. Every tit-for-tat move, tariffs, bans, restrictions, adds more uncertainty. Companies with global supply chains, especially in tech and manufacturing, are on edge. Investors fear this is just the beginning, with more sectors at risk. The market hates unpredictability, and right now, that's all it's getting. Stock prices are reflecting the fear of a full-blown economic conflict. No one knows what's next. That's why nerves are frayed. The trade war's impact is clearest in tech. Nvidia's stock dropped over 3%. They rely on China for materials, manufacturing, and sales. Investors worry about supply chain disruptions and China favoring local chip makers. Big banks like JP Morgan slipped despite strong profits, showing even good news can't calm market fears. Wells Fargo, focused on the US market, actually rose. Investors are seeking safety in domestic companies. Even healthcare isn't immune. Johnson & Johnson fell after announcing a major business spin-off. Broad selling shows just how deep the anxiety runs. Investors are rotating out of global players and into safer US-focused names. No sector feels truly safe. The market is in sell first, ask questions later mode. Uncertainty is everywhere. As if trade war chaos wasn't enough, the government shutdown has cut off crucial economic data. No reports on inflation, jobs, or consumer spending. Investors are flying blind. Without these gauges, everyone from the Fed to Wall Street is guessing. Corporate earnings offer some clues, but they're only part of the picture. The lack of data makes it hard to value stocks or predict the economy's direction. Doubt creeps in. Are stocks overvalued? Is the economy slowing? The Fed is in the dark too, raising the risk of policy mistakes. This blackout adds another layer of uncertainty. Investors hate making decisions without information. It's another reason for the market's jitters. In uncertain times, investors run to safety. US government bonds and gold are the lifeboats. Demand is surging for both. The 10-year Treasury yield is falling, a clear sign of rising fear. Gold is soaring, up 57% this year, trading above $4,100 an ounce. These moves show investors are bracing for more trouble, not a quick fix. The market is stuck, waiting for a signal. Will the trade war cool off or get worse? Until there's clarity, expect more volatility. Investors worldwide are watching for any sign of progress. For now, the message is clear. Stay cautious. The wild ride isn't over yet. Buckle up.